Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And boy, have I been looking forward to this conversation. That stock market last week was quite the roller coaster. It reminded me of the dot bomb era. And I am so glad I am sitting in cash and just watching the party. In order to have this conversation, of course, we need to bring on Mr. Dan Bird. How you doing, sir?
Doing pretty well. How are you?
Oh, man, I'm doing great. Like we talked about last week, sometimes it is okay to be in cash.
Absolutely. And interesting you bring that up because I had an email this morning from one of your subscribers after I sent my newsletter out this morning. And he said, you have been pretty accurate in predicting the market's going down. And you say to go to cash. Well, what do you mean? Where do you put your money? When you say go to cash, what does that mean? Do I buy bonds with it? Or so, I mean, it's different for everybody, but I just keep it in my trading account.
Yeah, just keep it in the account. There's nothing wrong with it just sitting in the account. It's okay.
Yeah, I mean, if the market turns, I'm ready to buy something.
Yeah, it's
so I just what I do is sell whatever positions I had and don't buy anything else and just leave it sitting there.
Yeah, no, we again, folks, Dan has his own playlist here. I don't know, 3 months ago or so, he's helping me do some trading. He had my first profitable trade, I don't know, about a month ago. But yeah, we've been in cash. We've been calling the market. I think 2 weeks ago, I said the market's going down 20% from here. Can't fight the Fed. We are well on our way. We had two nearly 1,000 down days. I feel really good about what you and I have done the last weeks. And if people want to go back and watch them, the videos are there. You have your own playlist.
Yeah, and the idea is, if you're a typical, trader newbie person, that you're not a hedge fund or a hedge trader, then you probably want to play the market to the upside. You want to buy something that's going to go up.
Yep.
You may not be familiar or even comfortable with shorting.
Yep.
Which you could certainly do and play the market on the downside as well.
Yeah, if you're a newbie, don't do that.
So if you want to buy stocks that are going up, then right now is the time just to sit off on the sidelines, sit on your hands, don't do anything.
Yeah, and again, go ahead.
Be ready.
Yes.
Do the research, do the work.
Yeah, let me ask you about that, because this is something I want people to realize. Building wealth is amazing. Lots of wealth is built by taking action in a recession or a bear market. Folks, we are probably going into both. Get your shopping list ready. Be ready. Know what you want. Buy in tranches. Have your stops. All these things that Dan is teaching me. Get ready. You should be excited. If your stock portfolio keeps you up at night, that's a sign that you're too fully invested. You should, your investments in anything, real estate, stocks, cryptos, industry, should never keep you up at night. If it is, that's a sign.
Yep, that's right. I'm actually going to, let me share. I don't know if you've given me share.
I did.
Here.
I learned.
This is a quote that I've used in the past. This is Jesse Livermore, one of the greatest traders of all time, who made and lost fortunes during his life. But money is made by sitting, not trading.
Ooh, I like that. I like that.
And what he means by that is two things. Number one, when the market's going down, then get out, sit on the side, and start doing your research, building your watch lists.
Yes.
Look for strong stocks in the strongest industries. Even as all of the industries are going down, there's still strong industries and stocks. Mm-hmm. So make note of those and be ready when the market turns. The other side of it is, once you're in a strong stock, don't trade out of it until
let your winners run.
Let the winners run, right? So that's what I mean by money is made by sitting, not trading. That.
Thank you.
And this is last week.
Whew. That's a week?
That's last week. Yeah, Monday through Friday.
And where did we close? Like 41.20 or something?
41.24.
So we never broke 4,100, right?
Not yet, but we are about to, I think.
Yeah, I think so too.
Let me go back 2 weeks. And there's a symmetry here, actually. Here's 2 weeks.
Oh, wow.
So
So what's the peak? 46.10 roughly?
yeah, 46.10.
Woo.
So
Wow,
in
that's more than
2 weeks, it went down
10%.
500 points. It's more than 10%
Yeah. Wow.
in 2 weeks. And
That's the S&P.
this is the S&P, right? I could do the, what do you want to see?
What, the
NASDAQ?
NASDAQ. Yeah, NASDAQ, 2 weeks. What's that? 13.7 to 12.3.
Yep.
Oh man. Oh, I remember those days.
But not fondly,
No, not fondly.
in retrospect. In
Yeah,
retrospect,
not fondly. No, I was trying to
'cause
say
you-
yes, but no.
because it puts you, well, it puts you on a new direction. So
Yeah, it did. It turned out okay, but it sucked in the moment.
right, yeah, and they always do when you lose money.
Yeah.
And that's not to say you're never going to lose. I mean,
No.
everyone loses in the market at some point. But the important thing is to not lose a lot.
Mhm.
And most important, and this is a really important idea, is when you find that your ideas are not working,
Yes.
that you think that you found a good stock and it doesn't go up like you expected, it goes down instead.
Mhm.
And even if you take your loss, take a small loss and get out, that's good. If you try again and it doesn't work again, if that happens a couple or 3 times, then just stop trading.
Yeah.
One of the things that a lot of new traders do is they do what I call revenge trading,
Mhm. Mhm.
right?
Mhm.
My stock went down, I lost money. Well, damn it, I'm going to make it back. And sometimes they say, I'm going to make it back on the same stock,
Yeah.
which might be, doubly stupid.
Foolish. Yeah. Yep.
But don't do revenge trading. Just stop trading. Just, take the loss, sit on the side and just watch it. You have to be in the right mental frame of mind. And when you
Agreed.
take too many losses, it destroys your confidence.
Yes, it does.
So when the market does turn and starts to go up, you won't have the confidence to put a trade on because you're remembering the losses.
Yeah, and when that happens and you lose 80%, you don't touch it for 15 years, said the guy talking to you on the microphone. Yeah, I know exactly that. Yes.
Yeah, and you put your money into some other ridiculous investment like real estate.
Yeah, it's just crazy idea.
So here's the VIX.
Woo!
This is my go-to VIX chart.
So it peaked at 30, just over 30 on Friday?
33, almost 33.50.
Oh, the gray. Okay.
The gray, yeah, the gray. The red is the 5-day moving average. So the gray is.
So we
the actual
closed at a
VIX.
peak.
We closed not
Or
quite at a peak.
Not quite a peak.
Because
Okay.
earlier, the Friday before actually. So we had the same kind of sell-off 2 Fridays in a row.
Mhm, mhm.
2 Fridays in a row, we went down almost 1,000 points.
So the Fed comes out, it's Wednesday, I think, May 4th. I think they're going to do half a point, 50 basis. You think so as well?
Yeah, absolutely. They've already telegraphed that.
Yeah, of course. And then here's a new wrinkle for you. I think they're actually going to come out and hint that 75 might be on the table for June.
That wouldn't surprise me if they said that. However, I'm not sure they will say it in this meeting.
That's true.
I think they may wait because the week after, is the CPI, the inflation report.
Yeah.
And I've been saying, as you know, all along, that the May report is going to show a decline.
Yeah,
it's still going to be high.
Yeah.
Still going to be high inflation, but it will be less than 8.5%.
Yeah, that's because of the base effect and all of that. But yes, no, I think there's a very good chance that you are right. But next week is very dicey, right? Do you
Very
think,
dicey.
Do you, like we talked last Sunday, you think the open's going to be rocky, maybe a slight uptrend in the, but you think there's more room to the downside? What happened last week? Look at the last week again. For the SPYs, fine. Or yeah.
That's the NASDAQ there. Let's see.
In 5 days instead of 10, please. Because what happened Monday? I forget.
Yeah, Monday we went up Monday, and then had a down day on Tuesday, kind of went sideways.
I was talking about the open. So we basically opened and went lower.
Yeah, we opened and went lower. About midday, we started climbing back up.
Yeah, significant climb. Tuesday was
The
selling.
next Tuesday we opened lower, continued down. Wednesday we opened higher and went sideways. Thursday we opened higher, came
Okay.
down, and then took off. Had a great run
Yeah, until Powell opened his
until
mouth.
the last 30 minutes basically. And then Friday it gapped down,
All down.
opened way lower, and just continued to sell off all day long.
So again, yeah. So where is support? Because
Yeah, good question. Let me take a look at. I'll try this one. So support's right about 4,100.
Ooh, we are right there.
Which we're very close to.
All right, so let's just play the game. We shatter that one. Where does support go from there?
4060 roughly.
Oh, so we're close.
Right, and then 3850, 37 to 3850 is what I've been saying. It's where we're headed.
All right.
Here's
so
this is the head.
one. Yeah.
Here's the head and shoulders pattern right here. All right, so 4,300 has been the battle line for quite a while, and we went below it last week.
We're not going to see that again for a while.
Yeah, we probably won't see that for a while. So we're now below 4,150, which was a light support right there.
Okay.
A little above 4,100, but down here, 4031 is the 50% Fibonacci level.
Okay.
So somewhere around 4050.
Okay.
Which I think we get to Monday.
I do too. Yeah, I think we get there Monday.
I think we get there Monday, and then I think we're going to have another rally.
Oh, really? Okay.
Like this.
All right. Well, let me ask you a question. I know you're talking about Fibonacci at 4050. Is there any psychological relevance to just round numbers like 4,000?
Yeah, there always are. Yeah,
Okay.
4,000. You know, we probably will break through this one, and because markets usually extend further than the targets, so we probably will break through this, get to 4,000, and then bounce back up.
Yeah.
And then you can see here 3850 down here.
Mm-hmm.
That's the bear market for the S&P. That's 20%.
Yeah, I think we're going there. I think all of the indices will be in a bear market sometime this month.
Let's see if I can find.
I think the NASDAQ is already there.
Yeah, the NASDAQ and the Russell are already there.
Yeah, so we got the Dow and the S&P to get there.
Right.
Okay.
So, you know, I think we're going to get down here. I think the Fed will do 50 points. Russia is trying to pay their debt. Yep. They're trying. We'll see on May 4th if they succeed or not. Okay. If they default, that's going to be all over the news.
Yep.
And then May 9th is Victory Day in Russia.
Yeah, talk about a day I was not even thinking about that you brought to the channel a couple of weeks ago. That day scares me.
Well, it's going to happen before. Yeah, it's going to happen before that day.
It's the week run up to that date, which starts tomorrow.
Yeah.
Oh, yeah.
So we don't know if he's going to do something crazy. You know, he might. We'll see.
Wow.
So that's where we are. Let's see.
So they kind of. Is it still kind of just you and I talking here, kind of another week to sit on our hands and just watch?
Yeah, I think so. I think Monday it'll be a sell-off in the morning, but I think we're getting close to an area where we're going to bounce, actually.
And I'm going to guess the way you're saying it's more like a trading bounce versus an investing bounce?
Yeah, okay. That's right. All right. Yeah, it will be a reaction rally.
Yeah. It'd be one of those, 2 or 3 deviations back to the mean.
By the way, while we're talking, put my newsletter up if anybody's interested. Yep. If they want to receive my weekly newsletter. I sent it out. I sent it out late because I was at my rental unit doing some work yesterday.
That is
so you might not have read it yet.
I have not read it. I saw it in my email this morning, but I was on an interview. Look at that poor bull beating on the door. The bears are coming. Help me. Help me. Help me. guy's in trouble. Oh,
Yeah. And then this one over here with the,
another robot. Cool. I'm long tech too.
that's actually a crash test dummy.
Funny. Oh, that's so funny.
Cool, I'm long tech too. Well, one of the things that I'll mention here, because I heard you talking on one of your channels about the unemployment rate is going down. It's going to continue lower. And then this Friday is the unemployment report, or the jobs report this Friday. And that probably will have a lower unemployment rate.
Yep.
I think.
That's what I'm calling. Yep.
But keep in mind that the unemployment rate lags recessions.
Absolutely.
The unemployment rate is usually the lowest just prior to a recession.
I agree. Yep.
You can see it, all these gray bars are the recessions. You can see just before the recession, the unemployment rate was at its lowest.
I agree. Yep.
So don't get complacent if we have a low unemployment number, thinking that that means the economy is getting better.
No, the economy is not.
It basically means the economy is getting near the bottom of the economy, not the stock market, the economy.
Yeah.
And a recession may be following soon.
Totally agree. This is a lot of fun.
And then we had the GDP number.
Yeah, Q1 negative 1.4.
Yeah, which I think is going to be temporary. I think it may bounce back in Q2.
It will. We will not call a recession. I've dug into the numbers. There's a lot of very large one-off adjustments that had to be made. It's still a negative quarter, but I don't think Q2 will be negative. We will not have an official recession in Q2. Nope. I don't think.
I agree. This is my newsletter, so I'm going to just talk to some of the things on here. So this here is something that I mentioned before. It's called Quad 4. It was something that was created by Hedgeye. The guy at Hedgeye created this chart of the economy, just using two metrics, GDP growth and inflation. All right, so if inflation is accelerating and GDP growth is accelerating, you're in quad 2. Right, that's where we have been the last few months.
No question.
Or at least through the end of Q4.
Correct.
If GDP starts decelerating, but inflation is still accelerating, then you're in quad 3. And that's where we were in Q1. All right. When you get to quad 4, that's where both inflation and GDP growth are decelerating. And remember, I've been saying that inflation, I think we've had peak inflation in the last report. Or worst case, the May report will be peak inflation. And it's going to start decelerating after that. GDP growth, I think, will decelerate as well. That's quad 4. And quad 4, markets crash 100% of the time.
Oh, no. So like the chances are good?
Chances are pretty good that the market will crash in quad 4. Well, let me clarify that. If the Fed continues to raise rates into quad 4, there's a 100% chance the market will crash.
Oh, joy.
All right. So if the Fed is, that's why I say they probably won't talk about 75 points in the meeting.
Okay.
Because they'll want to wait to see the actual number the week after.
Yeah.
And if the week after the number is still going up dramatically, then they might start talking about it.
Sure. Can you? I can't. I have to agree. I don't think CPI comes out above 8.5. I mean, just with the base effect going,
it might be below.
Yeah, I think. Well, yeah,
8.5.
And
if it's below, then I don't think they're going to talk about 75 basis points.
Yeah,
I think they're going to still talk about 50, but
yeah, I think they're going to. I think they're going to admit that the 25 was a mistake and they want to catch up, and they need to do 175 move.
But the really interesting thing is, so this month, the Fed meeting comes first.
Yes.
And then the inflation report comes a week later.
Yes.
In June,
it's the other way
reversed.
Around. Yes.
The inflation report comes first and then the Fed meeting. And if the inflation report in June continues to show a trend of decelerating inflation,
maybe,
then I think they're going to stick with 50. They're not going to go to 75. And then I think the one after that, they're going to pause.
That could be. I could see that. And this is a lot of good stuff, man. One more time, show where people can get you so I can read it, just in case somebody's listening. Oh, sure. Go ahead.
One more thing to point out in this VectorVest section here. This is every week I put this in. This BSR is the buy sell ratio. So it's the ratio of buys to sells, 0.15. You can see up here 594 buys or 6% versus 41% sells and almost 50% holds. Wow. Whenever that gets below 0.2, it is not sustainable. That means it's very oversold, and it's the time when the market's about to bounce.
Hence your call for a technical bounce. Or
that's one of the reasons. There's a number of reasons, which we'll talk about in this next session. And then the MTI is the market trend indicator. When that gets below 0.6, that is also very oversold. And that's the point when both of these are below 2 and below 0.6, then that's the point where the market is getting ready to rally. And when you should be, putting together your watch lists. And they even said down here, prudent investors should not buy stocks at this time, but should be getting their bargain hunting and bottom fishing list ready.
I like it. That's what we teach and talk about all the time, whether it's stocks or real estate. Do the work, do the work, do the work. Dan, one more time, what is the email?
Sure.
I want to read it for people listening on the podcast. It is breakpointtrading@gmail.com. Thanks, buddy.
All right. You bet.